This is the Friday, June 28, 2019 version of the Market Plus segment. Joining us now is Ted Seifried. Ted, welcome back.
Well, thanks for having me, Delaney.
You've had quite the tumultuous day today.
Tumultuous, yes.
All right, but you're
fun.
here. We've got a lot to talk about. We had a short market segment, so we've got a lot to cover here in Market Plus. Ted, I want to start out here. We had a report. We had them keep corn acres pretty high, lower soybean acres pretty substantially, and then they released a statement about hour after the report here saying they're going to survey again on acreage. Tell us what's the deal there.
Well, I mean, that is the deal.
Is it a cover you're behind kind of move?
No, it's not. It's basically the USDA's acknowledgement that, okay, the survey that we did at the beginning of June is not an accurate representation, or might not be an accurate representation of what we have out there. The problem that I have with it is, why do we do this an hour after the report comes out? Why don't we do it an hour before the report comes out?
Do you think that the markets would have traded as poorly as they did in the corn markets today if they would have released it before?
Yeah, no, I mean, that obviously is where I was going with that. Look, you know, when you have a report that the market is hanging on, pins and needles, right, and you release these numbers that are shocking to the market, and again, I can argue that maybe those numbers shouldn't have been shocking to the market, but limit down corn, right? We haven't seen that happen in like 4 years, okay? And then to come out after that and say, yeah, but you know, these numbers, maybe they don't mean as much as what you guys are reading into it. Well, hey, let's have this happen before this report comes out. Let's make the market aware that, hey, we're not confident that these numbers are accurate, so we're going to redo this again next month, and we'll have this report, same report, on August 12th. Okay, you know, when the market's not aware that, hey, this survey might not be accurate, and the USDA doesn't feel it's very accurate to the point that they're going to have to resurvey, then we shouldn't be putting this much stock into it. The USDA should be diluting that report before it's released, rather than throwing it into the wild, getting a limit down report, limit down move in corn, based on something the market doesn't understand, and then coming back after the fact and saying, oh, but yeah, no, this might not be right. So the way it was handled, yeah, I think that was really kind of amateur. I get it that this is not the USDA's, it's not their process, it's not how they work, you know, but this is an unprecedented year. And we've been seeing all through planting progress that the market does not understand a lot of the things that the USDA is doing. And is that the fault of the market? Maybe. To some extent, you should say, hey, we should understand more, or seek to understand more about the numbers that we read and the numbers that we use to trade on. And that's true. But at the same time, it's very difficult to do that. For certain things, the USDA makes it very hard to find out what their processes are. Now, they do some things, like we have, you know, data users meeting, which, you know, maybe 50 or 60 of us show up for, but there's not 50 or 60 of us, Delaney, that are trading these markets. There's a lot of people. So I really believe that is not really a courtesy of the USDA, but sort of a responsibility of the USDA to make sure that the people that are using this data and interpreting it and using it to trade these markets, it's their responsibility to make sure that the people understand that, right? They are the single most influential body on agricultural markets that is out there, period, aside from maybe the weather. But, you know,
Ted, you're starting to sound a little
frustrating. I know, it's frustrating. No, I put a lot of stock behind the USDA, and I think the work they do is fantastic. I think the one thing that is really lacking and has been shown time and time again over the last few years is that a lot of the people that are using these numbers, or reading these numbers and trading these numbers, and probably manage money in particular, don't really understand what they're looking at. Right? And even in the analyst guesses that we had for for the acreage numbers, you could see that there was a lot of people that were not understanding the USDA's process. And that's a problem. We need to understand the process in order to probably make assumptions or guesses for what these reports are coming out. And we need to not be surprised when a survey that is done when we have 30 million acres of corn left to plant and 50 million acres of soybeans left to plant comes out showing that we were intending to plant more acres than maybe we actually did. That shouldn't be a shock to the market, yet we're limit down in corn.
So Ted, let me ask you, planting progress versus crop conditions report, are you starting to put more stock in those crop conditions numbers released now, as opposed to the planting?
Look, stock, look, you have to understand how they're derived, right? You know, a lot of people are under the idea with planting progress that when we say this corn crop's 88% planted, that means we've planted 88% of the planting intentions number. And that's not the case at all. What it really is that we are 88% done with corn, regardless of whether we've decided to go prevent plant, decided to switch to soybeans. But really what we should be looking at is that we've got 12% left of this corn crop that we intend to plant. Now, again, last number we saw was 96%. I'm talking a few weeks ago. But soybeans is a good example of that. It's not the crop progress number, the planting progress number is not saying how many acres we've planted. It's just saying what's left that we're going to try to get in. And just like that, just say similarly as crop conditions numbers, you got to understand these are objective numbers that are, you know, we don't have people, the USDA doesn't have people scouting every field. This is just a general idea of how they think, the crop scouts think that their local area looks. We can be wildly off. We saw that just a couple of years ago where we really got fooled by that. So you have to understand it before you put a whole lot of stock in it one way or another. I mean, if you're thinking that this is the be-all, end-all, this, you know, stocks numbers, you know, have a super strong correlation to what final yield is, whatever, you'd be sorely wrong. We've made that mistake before in the past. We need to understand these numbers and we need to trade them for what they are, not what we think they should be.
Okay, that sets us up nicely then for a social media question here from Jared in Matin, Illinois. He said, since everybody knows this crop is in poor condition, how much would a poor harvest move the markets, and will it already be priced in before the combines start to roll?
That's an interesting question. Okay, so a lot of moving parts there. You know, we were in the process of pricing in a pretty significant production loss, especially for corn. With the numbers that the USDA gave us today and the reaction that we had to it today, we took a lot of that away. And we will see how we proceed from here. A lot of this, like I said earlier in the regular show, now we're going to transition away from a planting weather market into a growing season weather market. And a lot of that's going to depend on what the weather looks like between now and then. And we'll follow crop conditions. We'll follow crop tours. And I kind of get the feeling that maybe we don't really rally corn in the short term, although I do think we'll see a healthy bounce back from today's shenanigans. This might be something that we realize when we get into harvest. But, you know, today, a 91.7 million acre corn number, that just muddied the outlook so much more. We're more confused today than we were yesterday. And that's a problem for this market. So it's going to be a market that's going to have a lot of back and forth and volatility as we try to fight this out on the board to see what it is and try to guess, because we are at this point just blindly guessing.
Ted, if we do have a healthy bounce back, but maybe we still continue to be in this range, longer term towards harvest, we start to rally. Should guys be waiting to make some sales then until later this year?
I mean, I've been pushing guys to be making sales. Like, you know, look, again, this is a year where you want to use the board to lock in lock in prices to manage your risk and use call options to manage the opportunity of, you know, people that were talking about $6 corn and things like that. And that's all well and good. That's great. But sell $4.50 corn and use the call, buy a $5 call, and maybe you go to $6 and make an extra dollar. All right, so if you haven't been doing that, today should have been a very real wake-up call. I think if you get a halfway decent bounce, then you need to be selling again. I do understand that if you're not sure if you have a crop, you can't go too far with that, so there's other ways to manage that. But, you know, you got to be really active. Look, 60 days ago, you know, I would have guys calling me and saying, you know, I think I'm getting out of farming. I'm never going to get a chance to sell 420 corn again. Well, even after today, we have a chance to do that. Look, the opportunities have been there. And a lot of people put blinders on the idea that, oh, we're going to $5.50 corn. Somebody said $10 corn. So I'm not going to sell. I'm going to wait till that happens, because I can't. If I sell $6 corn and it goes to 10 and my neighbor sells 10, then he's going to buy all the acreage around. Wow, that's a very dangerous way of thinking. Look, it's very simple. If you're profitable, you start to make sales, right? And if you really want to recapture upside potential, there's other ways to do that. But we should have been being aggressive. If we haven't been being aggressive, we need to be looking for opportunities to do that. And again, I'm all for re-owning opportunity, But the bigger problem is managing your risk, and that's what we really need to be aggressive on.
Okay, Ted, I want to throw one more social media question at you since you're kind of our ethanol guy.
All right.
We've got a question here from Roger in Kokomo, Indiana. He said, with current oil prices, what corn price will begin to affect the ethanol production and
Yeah.
markets?
Wow, that's a great question, Roger. And once again, do we have 20 minutes? But okay, so, you know, the $60 mark has always kind of been the mark that we look at ethanol being really attractive for blenders, right? But when you have rising corn prices, that makes things a little bit less clear. The other thing that we've got going on is that the SREs, or small refinery exemptions, are pushing RIN prices down to the point where we don't have a ton of motivation to really blend more ethanol than what the mandate is. So as far as that's concerned, we're gonna get close to the mandate. That mandate is gonna keep us producing ethanol. It'd be great if we can get some export business rolling as well. As far as what price do we start rationing corn demand for ethanol, and I'm assuming he's talking corn price, I think north of $5, $5.25, then it gets really dicey. You've got a lot of ethanol plants that are inefficient that are already, we're struggling at $3.65 corn. They continue to struggle at current prices, and they'll certainly struggle at higher prices. But your inefficient plants will pick up a lot of that slack. I'm not terribly worried about ethanol production, and I'm not terribly worried about price rationing ethanol production. I think if we're going to see price rationing, it's going to happen a lot more on the export side of things, especially with the dollar being strong, even though it's come off the highs a little bit. And as you were talking about, you know, looking for different feed options such as wheat and things like that.
Okay, Ted Seifried, it's been an interesting day. Thank you so much for joining us.
Hey, my pleasure, Delaney.
Join us again next week when we'll explore how hay exporters continue working to recover from a dockside dispute. And Don Rose will join us at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.